Hello, ladies and gentlemen, my name is Greg Mikulowski from ForexLive.com. Today's date is December 5th, 2022. This is the Morning Forex Report. If you didn't get a chance to see my weekend report, it's a little bit more intense, a little longer, it takes some time. But if you're learning about foreign exchange trading, there's some decent little nuggets in there about levels to look for and why I look for them and why I outline those levels. So go back, take a look at it. If you like it, give it a thumbs up. If not, give it a thumbs down. We're an equal opportunity thumbs up or down giver company. So with that said, let's take a look at the what the market is doing here today, what some of the price action, maybe how that related to the weekend Forex report. So we'll start by taking a look at the euro versus US dollar. Looking at this currency pair, what I outlined over the weekend report was that the market the 50% retracement of the move down from the high price that we saw in January of 2022 to the low price came in at 1.05155. And if you look at the low price here today, that's where the price stalled against. So we went down, tested that level, and bounced back to the upside. On top side, we do have some resistance up here, which would be a target for this pair on further momentum to the upside. That level is defined by all these swing levels through here. One last test of that area after breaking to the downside here led to the move to our low for the year, and then a bounce back higher. So we are returning to a pretty good resistance area up here between the 1.0615, 1.0641 area. So be aware of that. We're still off of that level by a good 50 or so pips. Currently at the 105.669 level is where the market is currently trading. But we did hold that 50% retracement, which is the barometer that I outlined over the weekend for the trading or early trading this week. If the price could stay above that level and then above the highs from November, that would keep the buyers more in control off of this daily chart. So holding that level, got to give the bias to the buyers. As they stay in control. You can see this on the hourly chart. How the market cap moved higher in the Asian session, then back down, and moved back to the upside here, coming off of the new high, corrective high for this cycle here for the euro versus US dollar. But staying above the 105.155 level is a key level. These are November highs that we'd have to stay above as well, and the 100-hour moving average on the downside if everything starts to break down for that currency pair. Let's take a look at the dollar versus yen, and the level that I outlined over the weekend was, as a barometer, was going to be the 200-day moving average. That's a green line in the chart, rising 200-hour moving average, or 200-day moving average. And on Friday, we moved below that level and closed below that level for the first time going back to, I think, 2021. So a long time ago. And in trading here today, the market tried to stay below that level, but moved back above that level, tilting the bias a little bit more in the shorter term, at least to the buyers for the dollar versus yen. So if we take a look at the hourly chart, we can see that price action here. In the early Asian session, the price tried to move back above the 200-day moving average, failed, and then failed again to stay below that level. And this time the market found the buyers to push the price off of that 200-day moving average to our highs for the day, reached right now. So we're seeing new highs being printed in that currency pair. Now, targets on the top side, which I also outlined over the weekend, was come in at this swing low that we saw on Thursday's trade, and of course the high price that we saw on Friday's trade. That high price stalled right near the 38.2% retracement of last week's trading range. This is the high, this is the low. The 38.2% retracement found sellers, and the price moved back to the downside. So we are trying to rotate back to the upside and see if we can get above the 38.2. If we get above that, then we'll start to look toward the falling 100-hour moving average, which currently comes in at 136.51 and moving lower. So watch those levels. But the buyers are making a play here in the dollar versus yen with the next targets in play on the top side that we'll be looking toward. Let's take a look at the sterling versus US dollar. And this currency pair moved up and tested the topside swing area through here, a number of different swing highs here. Recall on Thursday, the price moved above the 200-day moving average for the first time since, going back to this time in September of 2021. So getting above that level is more bullish. And in Friday's trade, we did dip below the 200-day moving average off the employment report, then quickly rebounded back to the upside. And in trading today, we're trying to get above this 123.31 level. We actually did. The price high in trading here today reached 43, about 12 pips above that level, but that has since stalled out and moved back below the 78th level, the 122.78 level, currently trading at 122.65. So there is some disappointment on the break of the next target for the sterling versus US dollar. Let's take a look at the hourly chart to see what that is telling us. And here's the 12-pip break above that 123.31 level, rotated back to the downside, and we're currently trading lower on the day now. So a bit of a up and down, unsure type of bias here for the sterling versus US dollar. We see the dollar yen moving higher. We see the euro moving higher as well. So kind of mixed signal there for the US dollar, and we're seeing a mixed signal in the sterling versus US dollar as well. So now what I will point out here on the hourly chart, and it will be a level that to watch in trading here today, is this 122.21 level. That level corresponded with swing lows through here, and then on Friday the market fell below that level and tried to use that level as resistance right through here. It pounded against the level a number of different times, couldn't get above it, and then finally did get above it, and that opened the door for the move to the upside here. So on the downside in trading here today, the market did come down toward that level. Our low price for the day came in at 1.2232. So it got within about 12 pips of that level before bouncing back to the upside, and we will watch that level on further selling pressure. If the price should go below that 122.21 level, that would open the door for a potential move down toward the rising 100-hour moving average, which is also converged with the 200-day moving average at the moment. So that's a look at the sterling versus US dollar. So there you have it, a look at some of the major currency pairs. Again, go back to the weekend Forex report to get ideas about trading biases and what are key levels in play this week. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.